Walk me behind the logic of your call.
Sure. I think to put it in perspective, 2017 was the first year of earnings growth. And so we think 2018, you can still get solid EPS growth of around 8%. Valuations are cheaper than you think, where we see higher rates priced in, but higher medium growth expectations not priced in. And really the upside case hinging on a corporate tax cut, which we still see as likely. Congress motivated to do something before midterm elections. The impact is significant, and we don't see it priced into stocks.
So what Rohit was just talking about with David in terms of the corporate tax rate, will it actually wind up boosting growth? Will they wind up spending it and actually boost wage growth as well and then really trigger that demand? Do you need to see all those pieces fall into place for your 3,300 call?
I think the conditions are already there. So we have seen CapEx, X energy, and also R&D starting to pick up. And so the conditions are in place. We've had a profit recovery. So corporates spend their profits going up, more to spend on equipment, tech, and hiring. And I think a tax cut would be another catalyst to further boost that spending story.
Keith, unpack your assumptions here a little bit. Let's assume that the tax cut goes through, and that helps stocks, obviously. But what do you assume about what that does to inflation? What does it do to growth? And what does it do to the Fed? What have you priced in terms of Fed rate increases?
So we have, a 25% tax rate would boost S&P EPS by about 7%, repatriation another 2%, a GDP growth lift with a Fed that's still relatively patient, but potentially a little bit more of a pricing in on the curve front, and a very modest multiple expansion as the market starts to price in those second and third order effects on the growth front.
At what point does the Fed actually ramp up their increases? I mean, they already have 3 right now, the dot plot for next year,
right.
1 this year, 3 next year, that the market doesn't believe.
Right.
So at what point does the Fed have to increase actually the rates?
I think the rates market doesn't necessarily believe that. I think what we see from an equity multiple standpoint is equity investors do see pricing in that 2.8% Fed rate.